friends, welcome back to our channel. In our last two videos, we had discussed about GAAP and IFRS respectively. And in this one, we will know how they differ from each other. IFRS versus GAAP. The primary difference between the two systems in that GAAP is rules-based and IFRS is principles-based. This disconnect manifests itself in specific details and interpretations. Basically, IFRS guidelines provide much less overall detail than GAAP. Consequently, the theoretical framework and principles of the IFRS leave more room for interpretation and may often require lengthy disclosures on financial statements. The consistent and intuitive principles of IFRS are more logically sound and may possibly better represent the economics of business transactions. The IFRS versus GAAP refers to two accounting standards and principles adhered to by countries in the world in relation to financial reporting. More than 110 countries follow the International Financial Reporting Standards, which encourages uniformity in preparing financial statements. On the other hand, the generally accepted accounting principles, GAAP, are created by the Financial Accounting Standard Board to guide public companies in the United States when compiling their annual financial statements. IFRS versus GAAP. Major differences. Number 1. Treatment of inventory. One of the key differences between these two accounting standards in the accounting method for inventory costs. Under IFRS, the LIFO, last in first out, method of calculating inventory is not allowed. Under the GAAP, either the LIFO or FIFO, first in first out method, can be used to estimate inventory. The reason for not using LIFO under the IFRS accounting standard is that it does not show an accurate inventory flow and may portray a lower level of income than in the actual case. On the other hand, the flexibility of use either FIFO or LIFO under GAAP allows companies to choose the most convenient method when valuing inventory. Number 2. Intangibles. The treatment of developing intangible assets through research and development is also different between IFRS versus GAAP standards. Under IFRS, costs in the research phase are expensed as incurred. Costs in the development phase may be capitalized based on certain factors. On the other hand, GAAP generally requires immediate expensing of both research and development expenditures, although some exceptions exist. Number 3. Rules versus principles. The other distinction between IFRS and GAAP is how they assess the accounting processes, that is, whether they are based on fixed rules or principles that allow some space for interpretations. Under GAAP, the accounting process is prescribed highly specific rules and procedures, offering little room for interpretation. The measures are devised as a way of preventing opportunistic entities from creating exceptions to maximize their profits. On the contrary, IFRS sets forth principles that companies should follow and interpret to the best of their judgment. Companies enjoy some leeway to make different interpretations of the same situation. Number 4. Recognition of revenue. With regards to how revenue is recognized, IFRS is more general as compared to GAAP. The latter starts by determining whether revenue has been realized or earned, and and it has specific rules on how revenue is recognized across multiple industries. The guiding principle is that revenue is not recognized until the exchange of a good or service has been completed. Once the goods been exchanged and the transaction recognized and recorded, the accountant must then consider the specific rules of the industry in which the business operates. Conversely, IFRS is based on the principle that revenue is recognized when the value is delivered. It groups all transactions of revenues into 4 categories, that is the sale of goods, construction contracts, provision of services, or use of another entity's assets. Number 5. Classification of liabilities. When preparing financial statements based on the GAAP accounting standards, liabilities are classified into either current or non-current liabilities, depending on the duration allotted for the company to repay the debts. Debts that the company expects to repay within the next 12 months are classified as current liabilities, while debts whose repayment period exceeds 12 months are classified as long-term liabilities. However, there is no plain distinction between liabilities in IFRS, so short-term and long-term liabilities are grouped together. Now let's see the comparison table based on different aspects and criteria. First is what is IFRS and GAAP stands for. IFRS stands for International Financial Reporting Standard, whereas GAAP stands for Generally Accepted Accounting Principles. Second aspect is developed by IFRS, developed by International Accounting Standard Board (IASB). GAAP is developed by Financial Accounting Standard Board (FASB). IFRS adopted globally in around 144 countries. GAAP is only adopted in the US. IFRS is based on principle, whereas GAAP is based on rules. Inventory method allowed. IFRS forbids the use of LIFO and allows FIFO and weighted average cost method. GAAP permits the use of all 3 of the most common methods of inventory accountability, that is, first in first out FIFO, last in first out LIFO, and weighted average cost method. Inventory reversal. IFRS allows inventory write-down reversal. GAAP does not allow inventory write-down reversal. Income statements. In IFRS, extraordinary items are not segregated and are included in the income statement. In GAAP, the extraordinary items are segregated and are shown below net income in the income statement. Valuation of fixed assets. IFRS uses a revaluation model for valuation of fixed assets. GAAP uses a cost model for fixed asset valuation. Cost of development. Development costs under IFRS can be capitalized provided certain conditions are met. Development costs cannot be capitalized in GAAP. It is always treated as an expense. That's all for this video. Your feedback will be highly appreciated and will help us to improve the content. Join us in the next video to know about Indian Accounting Standard or Ind-AS. Thanks for watching. Do not forget to click the subscribe button and hit the bell icon for latest updates.